The Everyday
Guy
Podcast.
Sorry, no talking, yeah.
Hey, my brother, what you here for? He said nothing.
Personal finance is a large contributor to suicide in this country, unfortunately. And as a person from the banking industry, I have seen firsthand how personal finance is often overlooked by schools and parents. We got to educate our youth, man. We have to show the importance of establishing just a good standing bank account. So let's jump right into it. One thing I'd like to discuss with y'all is the difference between a credit union and a bank. There are huge differences and you need to know them. Most people have no clue that credit unions are like the most accepting people in the world. And they run to the biggest bank in their city. Bank of America, Chase, US Bank, Wells Fargo. But they never give the credit union a chance because of the untrue info that they heard from their mom or dad when they were like 15 or something. The big difference is that banks are for profit. Credit unions are not for profit. That alone should be the reason you bank with credit unions. Really. You got to think of it on a mass scale that they have shareholders that they have to answer to. They got to see profits every month. And how do they do that? By popping up with fees. They're heavily fee oriented. If you do not keep a minimum balance in some accounts, you will be charged like $10, which is ridiculous. And sometimes these accounts will even bring you into the negative to even roll in more negative fees. There's no compassion there. You try to call Bank of America and say, hey man, I messed up this month. Can I get, my fees reversed? You know what? We did that for you about a year ago, sir. I'm so sorry about that. We cannot keep doing this. It's ridiculous, dude. And I've seen it firsthand. And credit unions, you're a member. So you are the shareholder. They answer to you guys. You guys decide to leave. They don't exist. They are run off their members. So growing membership is all they care about. That does not mean growing profits. They win, you win. The more assets they obtain, the lower interest rates that they can offer you for home loans, auto loans, even for your interest rates on checking accounts. Some people get cash back depending on how much you use your money. That might be beneficial to you. I don't know. Type in Wells Fargo illegal accounts and see how many articles are out there about the corrupt ways of these big banks. Go and type in Bank of America's illegal immigrant accounts. These accounts are open with little to no information. And, I'm not anti-immigration, but when it comes to banking, you could do a lot of powerful things with your money that are hush-hush. There are certain, amounts you cannot transfer because you'll get picked up by the IRS. So there's people that are aware of this and they make, casual transfers here and there to these random suspicious accounts. Wire transfers go out. You have no idea. And type in Bank of America's role in that. Yeah, they're the bank of our country, right? That's ridiculous. But most people think that for credit unions, you have to be like a certain member of some special group or something. That's not always the case. And there's 3 types of credit unions. I'll break them down for you guys right now. There are employer-based credit unions that are offered to specific companies or industries. For instance, grocers credit union or the post office credit union or schools first credit union. Obviously, those belong into those different industries. Then there's government-based credit unions that are offered to military members or government officials. For instance, Air Force Financial Credit Union or United Marines Credit Union. And those are obviously offered to different branches in the government or in the military. And then there's a third one, which is the most common, most popular one, are community-based credit unions. And these, for example, is American First Credit Union or Credit Union of Southern California. These are just community based, so it's areas. If you live in a certain area, you can sign up for their credit union. You work in that area, you can sign up for their credit union. You have a cousin that's a part of the credit union, you can be in there. So it's very unlikely that a credit union will reject you based on any of those things. So if you're not a part of it, just say you're related, and that's your ticket. So credit unions want as many members as possible. Most credit unions offer auto finance interest rates far below what the banks offer too. Again, the banks want your interest. Credit unions, they just want to help you. That's it. You successfully pay off that loan, they're able to give you a better loan after that. It's just fundamentals, man. You don't have to deal with a faraway person taking calls in a call center, who have to shuffle around. Because if you don't know, Bank of America also does unemployment. If you've never had unemployment, you wouldn't know this, right? So Bank of America does the EDD cards that people get who are unemployment. And the only bank that they're able to access their funds is Bank of America. So they rarely separate, the EDD calls and the Bank of America calls as much as they can. But obviously, EDD is taking a lot of calls right now. So, they can't give you the same attention that a credit union can. They don't do those big, gigantic deals like that. So, again, go to a credit union. If you're not a part of them, go check one out. Back to my main point. Excuse me. Some people say, they don't want a credit union because they're not everywhere. And that's just BS that your mom and dad told you to shut you up because they did not answer you. Mostly all credit unions operate under a shared branch practice. So what that means is you can nearly use any other credit union's services, their branch or their ATM, to access your money or do whatever transfers you need to. Most people do online banking right now. So if you look at a lot of credit unions in your area, check out their mobile banking. Some of them are kind of old and outdated, but a lot of them are kind of stepping their game up right now. So you'll for sure find something you like in there. So again, you can use any of their services. So that already beats out, all the shared branches in the US beat out how many Bank of Americas there are, or Chases there are, automatically. And not only does that beat out them, you can use any ATM at 7-Elevens. Those things are everywhere. So they already have enough ATMs for you. And that's all for free. Yeah. If those things don't make you want to open a credit union account, dig deeper. Dig deeper, Rudy. There's a reason I refer people to credit unions as credit union customers as members. Each member has a stake in the credit union, like I was saying. So they'll give out dividend interest awards on credit checking accounts at times too. But more so, the more assets they're able to obtain, the better the rates they're able to give you. So, this differs from being just a customer at a bank. Being a customer at the bank, you're a customer, so you're buying something, they want your money. When they want your moolah, they bring out more fees to take your money. At credit unions, there hardly are any fees. I only say hardly because you can get fees if you're just going to be irresponsible with your account. But then again, you'll probably get more fees at the banks if you're deciding to be a little wild with your spending. But you just have to be aware of that. If you're going to be crazy with your account, I guess, I don't know, there ain't nobody that can teach you anything then, and you'll learn the hard way. But since, you are a member of let's say you're a member of the credit union, they have to keep a savings account on file for you. It's called your member file. It's your stake in the credit union. And there's no hidden fee behind it, no trick. But a lot of people get weirded out like, oh, I just wanted a check, I don't want a savings. But you have to have a membership. So that's the membership is the savings. And they're federally insured too. The NCUA is for credit unions, and the FDIC covers big banks. So both of them are nearly the same. Opening a checking account. When you open an account, you're ran through a system called check systems. This is like the credit union or credit bureaus of checking accounts. So, for instance, if you're a customer at Wells Fargo and you overdraft your account by like $500 and you just dip out of Wells, you never come back, you're never going to pay them. This system will let the credit union know that you owe Wells money, and you won't be able to open the account. So be careful with that. And that's just not credit unions. Anyone that opens a brand new checking or savings account gets run through check systems. They have to. If they're not, then they're an illegal branch or something's going on there. That's weird. But sometimes they'll let you slide if it's a low amount that you owe a different bank. But you don't want to keep doing that, man. It's going to be hard for you to establish any accounts. But just be careful with your checking account, and if you have to, go clear it. If you forgot, you went negative like $200 and you just forgot to ever pay them back for it, you can always go back and pay it. They might be able to work something out for you to get you off check systems, so you don't even have to answer to those questions. But if people get cleared from that, you move on. You pick the simplest, most freest checking account you can find. And make sure it fits your life, though. And just be aware when you do open a checking account, if the checking account earns interest, most of the time they want you to have like a direct deposit set up. And you lose your job, your direct deposit stops, you'll probably see a fee come in, it's like $10. So be aware of that. There are checking accounts with no interest bearing. So, you go that route, you might miss out on maybe 5 to 50 cents a month in your checking account interest that they offer. So it's not too much of a big deal. You'll lose far more if you get a fee. It'll take you like 30 years to pay one $10 fee off that interest. So be aware of that. And if this is all elementary to you, speak to a financial advisor in a credit union. Go in there. It's free. They're always looking to help, man. And no, you don't have to invest anything. You don't have to do anything. Just ask the guy or girl questions, man. Shit's not that scary in the credit unions. They're not after your money. They'll establish a relationship with you, and when your time is right or whenever your financial goals are made, go to them. They'll help you out. And most credit unions, they offer in-house mortgage financing. And they can beat out like nearly any rate out there. Again, it's free to talk to them. No fees, no sales metrics. There's no quotas that they have to meet. They just want to meet people. And if you're not into any type of that, that's like not what you're in the market for. Just talk to a personal banker in a credit union about interest bearing accounts like a money market. And, a money market earns slight interest, CDs, IRAs, Roth IRAs. Talk to them, get a breakdown. Most of them have like one sheets that break it down, super simple for people to use. And it's just a huge benefit. I always suggest it. If you get a chance, go speak with anyone in the credit union. I'll be posting like just a little list of credit unions to check out. If you're looking to get your kids, set up with an account, I suggest going to a credit union. A kid's account is the best way to manage them. You don't have to worry about fees or anything stupid coming after your kid's money. You can put locks on it where they can't spend more than whatever you want. You got to share the same login to see how much money's in the account. It's super simple nowadays. I suggest going to them. Don't send them to big banks. You're just going to start them off thinking that all banks and credit unions are the same, which is not the truth. So I'll be putting it on my website, be on Instagram. You click on the link in the bio and you can see any credit unions in your area. Check them out. They're really beneficial to you. Another thing I'm going to be posting on there is something I like to do when I want to forecast like how my month is going to look for my personal finances. Okay, so this is just a little template I use. I'll be putting it on my website too. It'll be downloadable. It's fillable on PDF. So use it, print it out, do whatever you want. If it helps you, amazing. If it doesn't, I tried. Maybe there's no helping you. I'm just kidding. So let me break this down. So you'll see right here, I have the pay dates. So you would just put, the days that you get paid right here, the amounts, you add them up right here. Then here is where I would start before going to variable expenses, and I'll explain those in a minute. Your monthly bills. These are things that just are constant, that don't really change often. Your rent, your electricity, your cable, your car insurance, your car payments, things like that, right? Your monthly bill, the due date, the amount, and then if you want to like check it off and mark it. And then again, you'll see I hope you can see this. So this is variable expenses right here. This is going to be things that just pop up. They can be birthdays. They're going to be like the gas in your car, the food, how much you want to dine in, dine out, for groceries and baby diapers and things that are just, they change every month. So you want to get like an average. And it's good to make these budgets because then you can start an average. Oh, look, I spent $200 on diapers last month. Next month, the following month, I spent $180. The next month after that, I spent $220. The last 3 months is an average of $200, right? So then you can forecast, all right, I might spend $200. And if you don't, take that money, throw it in the bank. Serious, man. Even if it's a little bit of money at the end of the month, because that's all we're trying to do is make ends meet. But if there's a little bit of money left over, throw it in your savings. Throw it in your savings. Don't mess around with it, man. I'm not playing with you. So this is variable expenses, right? And you're gonna add them up right here. This is your monthly bill total. Like I was showing you earlier, this whole thing right here. So down here is where you're gonna get into the nitty gritty. This is the area I like to be at. You know what I'm saying? This is gonna be your totals. So you're gonna put how much you made for the month right here in green. You're gonna put minus the monthly bill total right here, minus the variable expense total right here. Boom. And that's the total you're going to throw in that growing savings. All right. I have a little example right here, a little sample budget that I did. These are just numbers I made up. So we'll start with my pay dates. Let's say I get paid 2 days out of the week, right? Or 2 weeks out of the month. And I get paid $2,000 each. I get paid for a total of $4,000. Just take home. Don't do gross. If it's too much to do gross, there's no point. Go off of your net. Net's what you take home. So only use your net. I make $2,000, right? I take $4,000 home. So I'm gonna put my monthly bills. I got rent. I got gas. I got electricity, internet, cable, cell phone, car payment, car insurance, my daycare, credit card payments, all right here, right? So I add them up. It's a total of 28. Dang it. This thing needs to move. How do I move this thing? So you come here, it's your monthly bill totals $28.80 right here, right? All right. That's going to be for your monthly bills. And another thing too, budgets are really good to just kind of give you a little kick in the ass, man. Once you start seeing that you spend $2,880 just on your monthly bills, that means more than half of your pay, more than half of your work month is only going to bills. Think about it. All right, moving on. Variable expenses. These are, again, expenses that vary. Variable. They go up, they go down. Sometimes they're there, sometimes they're not. You got gas for your vehicle. You got dining out. someone's birthday, maybe a new phone upgrade. You know, you got to pay that activation fee. New clothes. You got to get school supplies for the kids. Baby diapers, makeup, nails, hair, shoes, new toy, whatever. It's all here. These things might not be here in November. They're going to be definitely bigger in December because you got Christmas gifts to buy, and this is a good time to do it. You can put Joey's getting $20, Jimmy's getting $20, Brian's getting $20, and then you can just plan for it, man. So look at that, $1,100 just on variable expenses. So we're gonna take those two numbers and we're gonna plug them in right where they belong with the colors. Okay, so you got $4,000 coming in. You got $2,880 going out just to monthly bills. You got $1,100 going to your variable expense totals. And the total that you have left over to throw in that growing savings is $20. Don't laugh. It's everybody's budget sometimes. And that's when you can start looking at things like, man, do I really need that new toy? That'll throw another $40 in the savings. What else? New clothes. Can I wait till next month? You know what? I got Christmas coming up. I'll get new clothes then. Whatever you got to do to make yourself feel better, and throw some god dang money in that savings account, because if we are going to change anything as a people, it's going to be through money, unfortunately. And if you don't know how to take care of your money, you are going to face a lot of problems that you could have avoided. It's unfortunate to say that, but it is a cold, honest truth. So I hope somebody out here likes what they heard. You know, I'm all ears, I'm all questions. I plan to have people from different industries. One of my guests that I want to have on, he's a real estate agent. I just want to sit out here and pick his brain and ask him dumb questions that people might be afraid to ask him. So I need to reach out to him. Gilbert, what's up, man? I'm going to get you on here, Gilbert, for sure. But yeah, I'm all about, you know, trying to help people. So if this helps anyone, great. If it doesn't, so be it. All right. Catch me next time on episode 44. Peace.
The
Everyday
podcast.
He needs some milk.
You have to go. Now, you understand, right? Thank you. Thank you, man. You want to take this stuff off?